Welcome back to Morning Markets. It's Friday the 26th of November. Paul Durrans, Investment Director. A relatively quiet day for stock markets yesterday with the US market shut for Thanksgiving. We did, however, see positive returns from European and UK stocks, rebounding after some weakness earlier this week. Overnight, Japanese stocks were weaker after the World Health Organization said they are monitoring a new COVID variant which has a number of mutations. Despite Thanksgiving in the US and relatively little new economic data, we did, however, digest the latest minutes from the European and US central banks' most recent policy meetings. Investors pay close attention to the minutes, looking for clues on the path of interest rates, changes in the monetary stimulus provided to their economies, and their economic forecasts. Important to investors as it can affect bond and stock prices and ultimately create opportunities. On Wednesday, the US Central Bank, the Federal Reserve, highlighted that given the broad improvements in the labour market conditions, where unemployment declined to 4.8% in September, and higher inflation, Fed members supported the act of starting to reduce the amount of stimulus provided to their economy. The central bank will scale back stimulus by $15 billion a month, with the program planned to end by the middle of next year. Interestingly, some officials preferred a somewhat faster pace of asset purchase reduction, with the aim of putting the Fed in a better position to adjust interest rates, particularly considering the inflationary pressures. If we contrast this with the European Central Bank minutes, they expressed the need for optionality. With elevated uncertainty over the inflation outlook, Eurozone inflation currently at 4.1% is one of the main yardsticks used to calibrate stimulus and interest rates. The ECB is expected to end its current emergency support measures by April, but they called for flexibility depending on if inflation either drops back below their 2% target or stay above. What we're seeing is Europe is increasingly diverging from the US, who have responded to their recent surge in inflation by promising to tighten policy. The US economy is at a stage where the Federal Reserve can remove stimulus and think about raising interest rates to tame inflation, which looks increasingly broad-based. In Europe, the direction of travel is less clear, and interest rates are expected to be lower for longer. For multi-asset investors, this creates opportunities in stocks, bonds, but also currency markets. Thank you for watching. Have a good weekend, and we'll see you on Monday.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.